Ladies and gentlemen, welcome to the SoFi Weekly. Sorry about being a little bit late. It actually wasn't me this time. I don't know where Tevis is. He's just not here. Oh, actually, wait. Hold on a sec. There's someone that's in the backstage. Roy,
Yeah,
man, thank you for showing up. I didn't know when to start the show. We're waiting on Tevis here. So
I heard that bum Tevis, he was going to be really late and not make it. So I'm like, I didn't think I could make it, but I'll not pull a Tevis. So
yeah. Oh, look who it is. Look who it is. Jeez.
There he is. He made it.
Welcome.
You guys suck. The audience can see right through you guys. You leave me backstage and you don't let me come onto the stage just to sell a false narrative that I'm like, this is fake news, and
sell a false narrative. You want me to leak some DMs? From the DMs, I'm seeing computer problems. Will be right there, 1 to 2 minutes late. I don't know. I don't see any problems here.
This freaking guy.
Is there echo problems? People are saying echo?
It's probably on my end.
Is it me, guys?
It's probably me. I mean, you guys all have headphones.
Well, got that.
Anyway, it's from Tanner. Oh, gosh. All right. Well, I don't know. If it gets real bad, I'll go get like something to put behind my thing. A lot of people are just saying no. All right. Anyway, welcome to the SoFi Weekly, ladies and gentlemen. We're on a Saturday. So, Tevis, are you able to say why it's on a Saturday?
Yeah, I'm traveling and I was in flights all day yesterday, and I'm in a different time zone, which is why we're doing it a little bit earlier because it's currently 2 a.m. my time. But yeah, I didn't want to really wake up at 4 a.m. to do this show, so I just stayed up and we're doing it at 2.
Okay, some people are saying that there's a real bad echo, so bear with me. I'm going to go get something real quick. The topics for today, I wanted to cover some of the large institutional activity. Okay.
Yeah.
I also wanted to talk about the short interest and what's going on in the sort of meme finance, trades, and potentially if SoFi is one of those. So, Tevis, if you can take it away for a second, I'm just going to get something from my desk to try to reduce the echo if there is any.
Sure. There's also one other topic I think we should talk about, which the SoFi private channel has been talking about. Chris Hager made a really good post about it as the warrant expiration, because there is some implications there with regards to dilution and just some of the downstream effects with regards to those warrants. So we can chat about that as well. I think those are the 3 main pieces of news. Yeah, we can also talk about the updated bank numbers that we got. SoFi is now 74th. They climbed up 1 slot. So those are the 4 pieces of news. Vadim, I really apologize because it is somewhat clickbait, but we will talk about it. So we will hold true to that promise. So those are the 4 topics, Tanner. I don't know if you were in the background listening, but that's it.
Warrants.
Yeah, I didn't really include the warrants because Roy and I kind of had our own separate SoFi Weekly where we covered all of that news already. But I don't mind diving back in. That's fine. You were late.
2 hours.
That's funny because Roy and I on Wednesday we covered the SoFi meme stock news. So we had our own little SoFi Weekly. We're both
the
sharing
bootleg Wednesday, as Roy calls it.
Bootleg Wednesday, and then we had the bootleg weekly last night. So I love both you guys. I can't think.
Do you guys know what a dryer ball is?
Yeah,
like the wool dryer ball. This is my dog. I just found this a second ago while I went to go get something to put behind my desk, and she just chewed it into half. So,
I thought that was a visual representation of SoFi stock.
It's cut in half. It's all chewed out. Well, let's move on. What do you guys want to do first? You want to do warrants?
Warrants is easy. Yeah.
Sure. Yeah. Let's talk about the warrant.
Okay. Bear with me while I just bring up the exact numbers. But essentially, SoFi had some warrants outstanding, the ability for some potential investors to convert into buying those shares at a preferred price later down the line, well, that was set at $8.86. So they can exercise their right to buy a certain amount of shares. I'll get the exact number. It's just a little over 12 million shares.
It's
At $8.
11.2 million shares. I think it's 866 is essentially the strike, something like that. I just literally finished making a video about it, which I'm going to
That's
post
for
after
the
this.
May 19th ones, right?
That's correct. They expire on May 19th.
So there's an additional sorry, I have the numbers now. 11,290,000 that Qatar Investments has for May 19th, but then Anthony Noto has 22,500 and Silver Lake has an additional 858,000 to a total of 12,170,000. That's the number that I was referring to, but you're talking about the May 19th ones specifically.
Yeah.
So the other ones are expiring May 29th. So they're going to be just right around the corner. Essentially, they have the right to buy SoFi stock at $8.86. Who does that, right? You can buy it right now for much less. And so these warrants will most likely be expired. In doing that, you lower the potential for SoFi shares to get diluted further, right? There's question about if it is currently diluting the stock or not. I'm not sure. From what I understood from fully diluted shares is that it's for present shares and like future potential like receivable shares, which would include warrants and unvested RSUs and all of these things. So I don't know if it currently counts towards the outstanding share count that's fully diluted. I've heard both sides, so I'm not sure. What do you guys think?
I think Tevis is frozen, but no, I would think that the total dilutive stock would include potential dilution of that type of the warrants, and so this would actually remove that. It would not make the float smaller, but it would make that number smaller. So, but anyway, like this is like the silver lining for a SoFi stock being frankly utter garbage this year so far. It's the company's doing great, the stock it's garbage for now. The price action. So.
Sure.
This is like it would only have been 1% of the float anyway, but it's nice that it's like, hey, at least Qatar, forget your extra shares that you get for a lot less than you thought you were going to get. Anthony Noto, you can buy them on the open market, that's fine. Silver Lake, if you want to snatch up a bunch, you can buy them too, but you gotta, unless you want to just waste money, don't dilute the float, just buy them off the market.
Yeah.
Am I still frozen?
No, you're good.
I'm on crappy internet, guys. I apologize ahead of time, but the Canadian internet wasn't that much better last time either. So yeah, they're all third world countries, correct? Yeah, right. So here's the thing. I see it in a very much more simplistic way, which is simply that if they don't have to issue more shares from their treasury, then that's the potential dilution that they have avoided. It's not necessarily that they're making the float smaller. It's just that they're no longer going to issue more shares. They're not going to dilute in the future. And I think that's something that is reassuring to investors, because right now the 2029 convertible notes is still top of mind for a lot of investors. So, it's like, okay, the Qatar Investment Authority, which is the majority of the warrants, has expired worthless, frankly, and the stock is not going to hit $9 by May 29th. They're not going to hit two more dollars in the next 2 weeks, so the rest of them are going to expire worthless as well. And so I think that is going to be perceived well by the long-term investors who are looking at the dilution. I guarantee you nobody in the Wall Street Bets community is really looking at the dilution, because they won't even be in the stock long enough to see it through, right? But everybody like us, dilution is something that we look at and we say whether it's good or bad.
Yeah, I mean, I'm still seeing a lot of people in the chat debating on whether it is for the diluted, like, is it going to positively affect EPS, or is it just going to save from further dilution? I'm not sure. Like, seriously. Sorry, Vadim here, who's my resident go-to expert for a lot of these deep questions, says it removes shares from diluted count, but they issues even more shares to buy back those convertible notes. Okay, what you're saying is it does help, but it's not going to help nearly enough because they've already done so much. Is that what I'm reading here?
Yeah, that's what he's saying, is that they did a lot more damage to the stock as far as the float, expanding it. I think it was justified. We already talked about that in the past with the convertible notes. So this is 1% either way. So it's not it's not a big deal either way. It does it. My understanding is just like Vadim's, that it does reduce that float. So it's good, but it's one of those, like, things were so bad with the stock price action. At least some good came of it for a change, right?
Well, when they issued the press release for the 2029 convertible notes, when that news came out, I could be wrong, but I remember the stock trading like at $9, like within that range. In other words, saying that it's frankly impossible for management to determine whether the stock would be above or below that 886 price point for those warrants. And so if they're a management team, they have to act as though those warrants are going to be exercised because they can't predict the stock price movement. And once they released the news for the 2029 convertible notes, it went from $7 or from $9 down to $7. And we just so happened that they didn't exercise. But in a parallel universe, they could have very well exercised, and management would, need to issue those shares. So
I would prefer they issued it. It would mean that the stock is near $9 a share, but hey, it's the best we can get while we're down here. Why not take it, right? It for the next people that come along and look at all the potential future dilution of the company, there'll be one less thing that's marked on that list,
I think the real benefit of them having issued those warrants or exercised those warrants would be that management would have another $100 million or so to play around with. I mean, just multiply 12 million by 886, and that's the amount of money management would have essentially had for operations and the like after, like, as a result of those warrants being exercised.
Oh, so what Vadim was trying to say is that just in this quarter, they've done more dilutive problems than actually taking away of the warrants. So it's still going to be increasing. So it is decreasing 12 million, but it's actually gone up so much because a lot of what's actually exercised was in April. So on the convertible note side. Okay, so yeah, that's the warrants. Cool. In another breath, we also are looking at some of the institutional buyers and sellers of SoFi. I didn't follow this too closely. It was like a lot of like Stock Goat, I think, was posting on it about X. So Tevis, I'll let you cover most of this if you've been following.
Yeah, so I mean, I named my video after this because it's somewhat clickbaity, and I just finished recording a video which I'm going to post after this live stream.
Go to bed.
But well, I was waiting for you guys anyway, so I was like, I might as well record something because I won't have a chance to do it in the
Yeah,
future.
we were. Yeah, you were waiting for us. Yeah.
Oh hush! Of the top 10 of the top 10 institutional holders of SoFi, I think StockGoat made a consolidated like post around their position increases. 9 of them increased their position, like the BlackRocks, the Vanguards, so on and so forth. And one of them sold out completely, which was Two Sigma Investments. They were the 7th largest holder, and they had about 14.6 million shares. Now, we don't know why they sold. We don't know what the rationale was or what the backstory was. Some people were saying in the comments that it could have been a conflict of interest. They are a major shareholder in Wealthsimple as well, Tenor, which is one of their biggest private investments. Wealthsimple, for context, is like the Canadian Robinhood. It's like the closest equivalent.
I just moved a lot of money over to them, by the way, because they just to the Canadians out there, they just made a massive update. They now have a bunch of new features, so check it out. But yeah, go ahead.
They still don't have level 1 options though. That's what Chris Sager was saying. Why are you investing in dividends? And I was like, dude, it's my broker, I promise. Anyway, so the point being, we don't know why any of these institutions held. Like maybe they're just bored of looking at the stock and seeing $7 every week. Who knows, right? Then maybe they had other opportunities. Maybe they're booking a win. Maybe they want to book a loss for whatever reason, tax loss or whatever. The point is that those 14.6 million shares that Two Sigma flooded the market with were picked up immediately. ARK Invest, I think, is up to 16 million shares now, and they accumulated the majority of that in Q1. Jim Simmons Fund, rest in peace, added more. There's so many different funds added, smaller funds. So again, and one thing I will say with regards to the institutional holdings is that you have to take them all with a grain of salt, because again, we don't know if the long position is a hedge against some short that they have. We don't know. In many cases, they are a custodian, so there's just underlying people that are buying more of the stock. It's not necessarily that institution itself is very bullish on the stock, but directionally speaking, I mean, we are. I think it was Kyle was counted it out. It's like 25 months or something like that where we have the highest institutional ownership. If you pull up that chart in Finto, you can very easily take a look. Actually, let me pull it up for you. So if you just look at this chart right here, you can see that we are approaching. Can you guys see my screen?
That's funny. Roy had this up already.
We're approaching almost an all-time high from an institutional ownership perspective, which is kind of exciting to see. I mean, the last time we peaked was in 2021 when the stock was like $16, $17 a share. And we were in a lull for quite a while and gradually increasing. And after the Q1 earnings results, you can see that, spike up, and we are gaining traction from the institutional perspective. I'm not really, too fussed if you have, one firm selling out or two firms selling out, because the trend is going in an overwhelmingly positive direction.
Yeah, sorry, I got caught up in some comments. I'm even looking through the 13F filings to see which of the funds are buying the most. Do you guys know who added the most amount of shares this quarter?
I think Kathy Wood, right?
Kathy Wood, and by like a very large margin.
Yeah, she's the reason that chart really spiked. And Kathy Wood, she can sell out, and she will. If we get a rise from SoFi, we're getting to like $10, $11, $12. She'll start trimming, but there is a slow, steady progression on this. It's still very low. It's around 33% institutional ownership percent, which is quite low. It's very retail dominated. It's a retail stock for now, but things are increasing, and I think institutions. I mean, there's any number of reasons why they're buying what they're buying beyond Kathy Wood. But I mean, the trend is good, but really will be a retail driven stock for probably a good long while. Unless the stock price goes crazy or there's crazy execution. So if it goes down to like the tangible book value, institutions will pour in because they're like, this is dumb and we like money. If they have phenomenal execution over the next year, yeah, we might see 45% institutional ownership at that point. So.
What were some other things on the docket that we needed to cover?
So the two other things were the bank numbers, the updated bank holdings, and the meme stock thing we didn't talk about.
Sure. Yeah. Okay. Perfect. Do you want me to just bring up? I'll bring up the chart just because you'll be able to see every quarter side by side.
And while you're doing that, just as a reminder for folks, Anthony Noto, his goal for SoFi is for SoFi to become a top 10 financial institution. That's more than just banks. That's including the Robinhoods and PayPals of the world, Block as well. It's on the list. And so, big goals, big vision. It will take some time to execute, but they're moving up. And this, I mean, I'm not happy with the stock price action, but the stock is the stock. As long as the company is sound, which it is, happy. So,
Well, the stock price action kind of matters because when Anthony Noto said that it's by market cap.
yes.
So eventually, I mean, these two should be correlated in terms of the consolidated assets going up and the market cap going up. But I mean, not necessarily so in the short term.
You guys want to know you want to get a little conspiratorial? That top 5 or top 10, top 5 bank by market cap. The first time he said that top 10 bank by market cap, that interview has been deleted off of SoFi's website. You can't find him talk about that. And to know the exact date of that, so then you guys can look, I think it was May 28th, something like that, in 2023, or maybe it was 2022. Anyway, I know that because Stephen Fiorillo wrote an entire article about it. And then so I went back to go look for that article, couldn't find it anywhere. The way that you can find it today, where it still lies, is on JP Morgan's website. And so you can actually get that transcript, but it doesn't actually exist if you're looking at, you know, seeking alpha transcripts or going through Koifin or any of these things. It doesn't exist. It's very weird how it's just gotten taken off the face of the earth. The only way to listen to it is right off of JP Morgan's website. And then ever since then, the only person to bring up that quote was Reggie Smith. And Anthony Noto begrudgingly said that it was by market cap. And then I think afterwards, he said something about it being a top 5 bank or something. But
I mean,
yeah,
I'm pretty sure he's tweeted about it multiple times saying top 10 financial institution. I could be wrong, but I'm pretty sure I've seen Anthony Noto tweets over the years around that specifically.
maybe. But if you go through their transcripts and you type in top 10 financial institution, you'll be stuck. Well, I think most recently he said something about it again. But aside from that, it's been like vacant, deleted. Anyway.
I mean, I think consolidated assets would be a better measure, right? Because market cap is so out of their control with regards to how like detached the stock price is with the actual company fundamentals. It's harder for them to predict what the market cap is going to be on any given time. Whereas the consolidated assets is more within their control.
You want to zoom that in? So this is July 12th, 23. It's a matter of when, not if, we become a top 10 financial institution in the country. When is going to be driven by SoFi continuing to deliver on being a household name brand or brand name, on being a trusted partner for our members. Enjoyed speaking with Barron's online about SoFi. Yeah, so I guess, they're not hiding behind it, but it was just so weird that the transcript just completely was not on their website. I was like, what the heck is going on? I've never seen that before, where it was just gone. Let's go over to the consolidated assets ranking, because I had it on the screen and then we didn't. Sorry. There. So if we look here, the rankings for SoFi before, try to make it as big as possible. Back in Q1 of 2022, we were ranked 449th place in terms of large commercial banks ranked by consolidated assets, as per the Federal Reserve. Then 240th, 184, 149, 114. A lot of this was actually moving money over to the bank, as well as just surpassing a bunch of much smaller banks. But eventually, we're starting to get to this point where we're fighting with the biggest banks on the list. So although our assets are actually moving up still very greatly, the push towards some of these higher numbers is going to get harder and harder. It's not like we're going to break into number one anytime soon. I think, what is it, JP Morgan or whatever, the top one on the list is something like, is it 100 times or 1,000 times larger than SoFi's number here? So it'll be a bit, but
yeah. But I am moving over to SoFi as my main bank. I've already set that up. Direct deposit will kick in fairly soon. So we'll see a big jump in quarter. No, I'm just kidding. But I am doing that. But there are seriously, I shared this story late last night towards the end of Tanner and I's little broadcast there. the name recognition is immense for SoFi. Like people actually recognize it, they know it. I shared a little anecdote. I won't do it all again here, but that my middle son's finance intro to finance. I can't remember the name of the course, personal finance course um, at this university, Liberty University. That's where he goes. He had a class of a lot of residential students, and it's a pretty large residential and also online campus. He was pumping SoFi Bank. He's like, "Hey, you guys should sign up for SoFi Bank." So yeah, it's out there.
Yeah, yeah. No, I'm excited to see how their progress is going. Like we looked at April's website traffic, and that was pretty strong. I think it was their second highest month ever. Or if, no, I think it was their strongest month ever. Let me take a look here. It should be right on this spreadsheet. Yeah, sorry. Let me throw it up. I didn't have to take my screen down. It's on the same page. This top row here is actually SoFi's. I think it should be one of these. Yeah, this one. Sorry, the colors are all wrong just because I haven't played with the chart yet. But it is actually our highest at 16.35 million versus 16.3 million that we saw in January. So, yeah. Okay, so what else is there that we haven't covered yet?
Memes.
Okay. And that's my favorite one I want to talk about anyway. I've been seeing a lot of people online talk about selling SoFi, getting out, waited too long, opportunity cost, stuff like this that are very real. But it's not like the company's getting any weaker or anything like that, in my opinion. With that being said, there's sort of a retail movement going on, like what we saw back in 2020, 2021, where some familiar names are starting to make some large increases in their stock price, or not even large increases, but extreme volatility, I should say. GameStop, AMC, but most notably than those, Faraday Futures. Now you're seeing a lot of people revert back to Wall Street bets to say, hey, what company is going to be on that list for us to target? Some of the other names that people are talking about are like BlackBerry, right? But the one that I'm most particularly looking at them talk about is SoFi, and it's on the list. They're discussing it within their little, well, not little. What we're doing here is little. There's like 15 million members in Wall Street Bets. But yeah, I wonder, do you guys think that we could have an unintentional benefit of holding SoFi would be the fact that Wall Street Bets may point their sort of meme cannon our way and just fire a ton of friggin' shares and buy up and try to hurt the large amount of shorts that are that have been attacking this company sort of like with zero consequence for the longest time. Do you think that, you know, we could potentially have like a roaring kitty situation happen on SoFi?
So I'd like to go first on this one. I think, yes, we could see a short-term influx of buying pressure. Overwhelmingly, though, I don't really love that association. Here's why. Because, and frankly, I don't, just before I go into the reasons why I don't like it, but I don't think it's going to be anything material, because I don't think the short interest for SoFi is as drastic as it is for these other names. For GameStop, particularly AMC, like these things are shorted to the ground. And I think there's going to be a lot of covering that we see from now until the next report for SoFi. So it's going to get muted even more. The reason why I don't like this association is because, number one, it brings back that association with SoFi with SPACs, and SPACs predominantly, you know, being these unprofitable companies that shouldn't have IPO'd or IPO'd way too early. And I think of those SPACs, that moniker holds true, except for SoFi, because now they're profitable and sustainably growing and doing so, you know, very healthy. And so it just brings back that negative association with SoFi, even associating that as a meme stock. That doesn't really help us, number one. Number two, I think that even if we get a surge, let's say, you know, we're at 750 and just the Wall Street Bets community just pinpoints it on SoFi for whatever reason out of all the other ones, and they take us like to 850, or they take us like to 9, or maybe let's just even say they take us to 10. Really what we need more than anything is we need a sustained movement upwards, not necessarily a very sharp burst and then a sharp sell off again. That's going to be worse for us from a psychological perspective. And we know that if people in the Wall Street Bets community are targeting SoFi, then they're going to be looking to make some money and then trade in and out of it and then sell when they're done making that money. It's not going to be a stock that they buy and they hold for years on end, especially with how SoFi moves. It's going to be way too boring for them, way too slow for them. And that really won't help us when we're looking for a sustained move upwards to break past that trend. In fact, it'll hurt us because it'll reinforce that trend. If we go back to 10 and if we fall back to 7, like you're toast, man. I saw somebody here in the comments asking what's the next catalyst for SoFi, and I kind of agree with them. Like, I don't know that there is a big catalyst on the horizon, and again,
It's
the
rates.
more that we repeat that psychological pattern, the worse it's going to be for SoFi. The longer we repeat it, if we go back to 10 and back to 7, it's worse. If we do it twice, it's even worse than that. If we do it 3 times, it's even worse than that, just because it reinforces in its mind, and you get like these calluses forming with a massive selling walls and massive buying points, and you just get range bound so much harder than you already are.
Roy?
Yes. We know SoFi is not a meme stock. Palantir, I've been here before, not a meme stock. They got a while ago associated with memes. They're both legitimate companies. Both are profitable. It takes a while to shake that off. As a shareholder, we can get some benefit from this, but there's a couple of things going against SoFi. One is, I think we're not in the same low interest rate environment where people can just take out margin on a whim without much consequence or penalty, and the government is giving people free money hand over fist. We don't have that time. When people do desperate things, it's either that they're getting free money or they are going through a very difficult time. And if it's a difficult time, they tend to be a little bit more cautious, even when they're desperate. Like when they get their gains or what they need to do, they're not looking for to buy a private island. They're looking to pay their bills. And so, I think that the meme bubble there, I don't know that we'll see a repeat of that this next week. We'll see it around. Like, this will pop up from time and time again. I have no idea why anyone would ever short GameStop. It's just like, it's not worth the risk. But I will say the short interest actually is higher, the reported short interest for SoFi than it is AMC. Now, there is another thing that's going against SoFi. We have a very large float. Small float stocks, and there's a lot of reverse splits that AMC went through, do a lot better, pump a lot higher. What I really realistically think could happen with SoFi is this gives a measure of caution towards those that are short in the stock. And frankly, it doesn't make any sense at all to be short on SoFi at $7. If it's 12, 14, maybe. But like, how low are we going to go? $6? Maybe. Like, it's tough. 5? I don't see 5, man. Things would have to be falling apart in the economy. Maybe that'll happen. 4, like, you need World War III. Alien invasion, yeah, it could go down to 4. But like, you get less and less more incredulous as you go further and further down, because it's smashed down so far, and it's a profitable company. They're not losing money. That narrative is gone. So I think realistically what could happen is a catalyst, and that catalyst is rates. If there's a whisper of rate cuts on the horizon, like we're considering that highly, that may be enough to trigger the stock going up. And that's enough for the short sellers that are already like, you know what, maybe we should think about covering some of this. Not everybody's going to capitulate, but some of them certainly will. And that can cause others to capitulate as well. I don't think that we're talking about going from 7 to 14 to 48 or something like that. But we could get back into the double digits pretty quickly on just a little bit of good news, that catalyst right there. It's not guaranteed to happen. We could be higher forever, for all I know. I'm not banking on it. I'm not investing for that reason, but we can still benefit from it. So it's good to kind of know that on the horizon. That's my take.
I don't agree with Tevis. I don't think that it's a negative. I don't think that there needs to be a way that a collective thinks about a company. There'll be people that think about it as a bank. There'll be people that think about it as a technology company, a meme stock, whatever. You think about it how you'll want to think about it. As long as that it stays true to my beliefs, I'm going to hold it. In my opinion, I've been through one or maybe two short attacks. I've held stocks, at least that come to mind, and the one that really comes to mind is Tesla, right? After that happened, no one thought that was you know uh, a meme stock of any sorts, right? People go, "Oh wow, this is a real competitor." In fact, it changed the way people thought about the company. They at one point thought about it as a car company, and then after it, they thought, "Hey, this is a real company." I don't think that ever came to AMC, GameStop, Faraday Futures, and anything, because these companies are, no offense, going bankrupt. They're shit. Like they're you're betting on tokens. There's no business behind them. And so,
So
sorry, I'm just going to add that SoFi to some degree is a voting machine right now and a weighing machine in the end. If you want to look at them from a tangible book value perspective, they're growing. If you want to look at them from a sales perspective, they're growing. From a PE, they're growing. So, I don't necessarily think it would hurt. And I think that it would get a lot of people out from underwater positions that they might have in long-term options or something like that, that they could potentially, close out and roll into something safer, like just common shares long in a, SoFi portfolio, if that's what they want. But, yeah, sorry, Tevis, go ahead.
yeah, so first of all, I think there's a big gap between the short squeeze at Tesla and the short squeeze at GameStop because of how, like, the underlying health of those individual companies. The second thing I'll say is that having that okay,
Yeah,
let's
but
say you're investing in
what
SoFi
about
for
the
2 weeks.
underlying health between Tesla and SoFi? Not Tesla and GameStop, Tesla and SoFi.
Yeah, so I'm saying, like, if I were to get caught up in the momentum and I buy SoFi at $15 because it pumped and then it dumps back to 7, I guess I'd feel a little bit better about holding SoFi than holding GameStop or AMC, because I'm like, damn, this is absolutely dead money that's going, this company's going bankrupt. Whereas for SoFi, I'm like, maybe it can grow into the valuation. I'll have a couple years where it's dead money and then maybe I'll break even. So it's better in that sense. But my point is that if you're buying the stock for, I buy stock go up reasons, then you're in it to be in and out, trying to time it. If you're buying it as a long-term investor, trying to look at the underlying, fundamentals of the company, then you're not even participating in this. What I'm saying is there's going to be a group of people that are going to go with the herd and they're going to get trapped at the top. There was people that got trapped buying GameStop at $300 where it had no business being at $300. Why? Because people pumped it up to that level where it has a complete disassociation between the stock and the company. And you might say, yeah, well, those people make their own decisions and they're idiots for doing that. But if you're trading with the herd, you're going to get caught up at some point or another. And it's just not a good look for SoFi, if you're thinking of it from a top 10 financial institution, for it to be privy to these types of moves, because that's how people get, like, really, jaded or whatnot. It's going to happen either way. I mean, like, people
Institutions are going to look
do
at the
what they're going to
company.
do.
Institutions are going to look at the company based on Noto and team's actions, not based on retail audience actions. I don't agree. I think that if anything, it just allows them more flexibility. Like, you have more flexibility whenever the stock is up.
So why didn't anybody look at the stock from Noto and Team's actions when they were associating it with a SPAC?
Well, because it wasn't a
Like,
profitable
SoFi had
company.
no business. No, but it was trending towards being profitable just because,
Yeah,
like,
so was Tesla. I
if
don't
they're,
think that
yeah.
everyone sees the picture.
So you're saying that the moment the company is profitable, then that's how institutions are gonna, forget that it was a SPAC, forget all of this, backstory, and just see a profitable growing company. Like, some might, for sure, but there are still those associations. Like, I guarantee you, if SoFi, went through that traditional IPO process, it would have been a smoother path to get there. Sure, they're going to convince people over time because they are growing and they're doing it sustainably. And that you just convert a lot of the bears naturally through execution. My thing is, it would have been a smoother path to get there as opposed to just this volatile path and having those negative associations that come with a short squeeze. Like, it's a lot of short-term benefit, sure, but again, reputationally, I don't think it sends the best signal to the the longevity of this company or the stock, I should say.
Yeah, I think the only thing it really does is if there's a short squeeze and then we somehow hold some of those gains. Usually they don't hold, especially in a name like SoFi. We might hold over like at $10 or $11, but if it pops to like 15, I don't think it's going to hold in this environment. Maybe I could be wrong. I love it, but it will probably slow down institutional adoption a little bit. But I don't think that there's any stain on the name. The company is not the stock. The stock is not the company. Most institutional investors invest in the company more so than the stock. They do look at the price, but they have long-term horizons. And there are a number of funds that absolutely will not invest in a company while they are not profitable. They have it written in their bylaws or whatever they use to make those decisions. So SoFi, I think it'll continue to see more adoption. The lower the price is, the more rapid that adoption is, as long as they continue to execute. I would not mind if we get a short-term pop. I'll sell some of the leaps. I'll keep holding shares. I'll probably actually just use those proceeds to buy the stock. So your long-term.
If people look at funds often, the bylaws that Roy is talking about is their fund objectives. And they literally set, whenever these are created, like, hey, we want to invest, but we don't want to do this, this, and that. Okay, they'll set out what in their prospectus what they are planning on doing. They do not break those. They do not make exceptions for those. They stick within the guidelines to make sure that investors who were buying those funds are getting what they expected, right? So although SoFi can look like a bank and maybe a lot of bank style funds want to buy it, if it's a penny stock, which some people said, I saw in the chat talking about how these companies are Wall Street Bets is looking for penny stocks and SoFi's over $1. First of all, penny stock is not a dollar company. It's actually weirdly $5. Mm-hmm. And GameStop and everything, like it's a $22 stock right now. So that doesn't even make any sense. They will look at it if they see that the short interest might be squeezable and it's a company that they can get behind. But yeah. Is there any other parts that we want to cover today? Are we doing an after hours show today, or do you guys want to do it later on in the week? Tevis, up to you, my friend.
Yeah, we can do an after hours show. We can do a quick one.
Okay, I'll leave it to you guys. I won't be able to participate this time. I got to head. So
no, you're good. You're good. Obviously, Roy, your timeline was not that strict. You're breaking your family's heart. Your work is not getting done, but he's doing it for the betterment of the SoFi community and the fintech community at large.
That's right.
All right, ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. Check out Tevis's channel, especially on X at Fun of Investing. What's your YouTube channel name now? It's not Fundamentals of Investing podcast. Tevis, perfect.
It's just Tevis.
Perfect. Check out Tevis, Roy at cross_roads, myself at Future Investing. There's no I in that in the middle part. Freaking person stole it from me. And I'm pretty sure we all only have one X account, by the way. We don't have 10 that are asking you for crypto investments and to sign up for private telegrams. So if you see someone reaching out to you, or if you see Tevis follow you at all, he most likely is not. Thank you all so much for watching. Really do appreciate your time. But bye for now.
Later.